Hey guys, welcome to the Wealth for Real YouTube channel. I'm Chris Anastasio, your host, and this video is about the Bear Stearns collapse in 2008. And you might be asking, why is Chris making a video about Bear Stearns collapsing 15 years ago? Two reasons. One, more formally, I've kind of been on this kick of looking backward, using some retrospective analysis to try to look for clues and patterns and fractals and stuff like that on what's going to happen next and how it's going to happen. So I've been really kind of fixated on, like knowing I didn't pay enough attention the last time, even as interested as I was when the Great Recession happened and the housing crash and all that. I could have done a much better job of really digging into the details. So a lot of the stuff from '08 and the run up to '08 and even well before '08 that laid the foundation for '08, the laws and the regulations that changed and things like that have become intensely interesting to me. The second reason that I wanted to make this video is just for fun, because I enjoyed this article that you see here in the background that I wanted to show you guys, and kind of just go through a couple sections. And it's not going to be a long video like some of the other ones I've made where I break articles down like this. This is really kind of like some top level stuff. But if you guys are interested in finance, you guys are interested in the stock market or macroeconomics, or you're obsessed with 2008 like I am, look up this title right here, Bringing Down Bear Stearns, in Vanity Fair, June 2008. Now note that date, guys, because that's in between the two big collapses, or two kind of, I guess, milestones, if you will, in 2008 that really kind of kicked things off. You had Bear Stearns go down in March '08, Lehman Brothers in September '08. So this article is like kind of right between them. But anyway, you can see here, they kind of kick it off talking about the liquidity problems and rumors that circulate around Bear Stearns, and basically how the Bear executives, CNBC reporters, the nervous Federal Reserve, et cetera, kind of all coalesced into this greatest financial scandal in history. Well, obviously you can see this article was written in June of '08 because the scandal got worse and worse and worse as time went by. But I just want to point a couple things out to you guys. If you guys do happen to read this, would love to hear from you in the comments. Drop me a line, let me know what you thought of it or what you took from it. But just a few things that jumped out for various reasons. Right here in the introduction, it's very interesting to note the way they categorized or characterized the situation with Bear Stearns, sort of like the credit crisis. That language was just kind of coming into conventional use around that time. Later it was definitely referred to as a credit crisis, credit crunch. But here you can see them kind of gingerly employing that term there. And they say here, quote, where trading firms routinely borrow as much as 50 times the cash in their accounts to trade complex financial instruments such as derivatives. So this right here, guys, that crux right there, is something I'm kind of unraveling real time. I'm looking at, Glass-Steagall. I'm looking at Gramm-Leach-Bliley Act. I'm going to look at Commodity Futures Modernization Act in 2000 that really deregulated the derivatives. So just interesting how this kind of gets thrown around here. Like, yeah, they just, trade 50 times the amount of capital that they have on hand. Obviously, at this time, there was a shift beginning on like, well, is that a good idea or not? And it would definitely be decidedly considered a bad idea as the '08 crash unfolded. But it's interesting how it's casually mentioned there. Now, scrolling down, guys, just forgive me as I go through this. I want to show you another section that was kind of interesting. So here, it's kind of a curiosity to me how they categorize the different Wall Street firms. I call it Phi Kappa Wall Street, big backslapping Irishman, Merrill Lynch, humorless grind, Goldman Sachs, straight-laced rich kid, Morgan Stanley, tough guy loner, Bear Stearns, extended middle finger toward pretty much everyone. Bear, made up of the bridge and tunnel crowd coming into Manhattan. They said here, they took anybody, Brooklyn, Queens, Poughkeepsie, et cetera, et cetera, et cetera. As long as you could make money, Bear Stearns was the place for you. And then this is kind of funny here. Ace Greenberg, who is their CEO, avuncular sort. I think he was their CEO or chairman, longtime chairman Alan Ace Greenberg, called his employees PSDs, poor, smart, and deep desire to get rich. But you can see here it talks about Greenberg kept his desk on the trading floor and answered his own phone, taking it over after Lewis's death, Salem Cy Lewis. In 1978, Bear remained a Mamet-esque pressure cooker where top traders could pull down $10 million a year while runner-ups were tossed into the alley. Now, 10 million in 1978 or 1980s obviously would have been an enormous haul. Even today, $10 million would be great for a trader. So just kind of interesting how they characterize Bear. I once had my Series 7. I once was fascinated by Boiler Room. So this kind of stuff here, piques my attention when I see it. The last thing I wanted to show you guys that really kind of drew my attention, I'm going to scroll all the way down here. And in the article, guys, it's long, but if you're really interested in this history, it unfurls all this stuff that was happening at the time in 2008. So it's very fascinating in that regard. But it's going to show you some of the behind the scenes stuff. Who knows how accurate it really was or how glossed over it really was, but it was intriguing to see some of these details that even 15 years later were interesting. I didn't know them back then. I didn't pay this close attention to them back then. But what was really interesting to me, guys, let me see. Here we go. So this is kind of like the final section. You can see, starting from this like capital red B all the way to the author's name. But what's really interesting is, remember, it's June 2008. So look at this. According to one vague tale, let me just highlight it for you. According to one vague tale initially picked up at Lehman, a group of hedge fund managers actually celebrated Bear's collapse at a breakfast the following Sunday morning and planned a similar assault on Lehman the next week. Well, guess who collapsed, 3 months after this article? Lehman Brothers. Of course, they didn't know that, I don't think, when they wrote this article. So that's really interesting. And then here, they talked about, true or not, Bear executives repeated this story to the SEC with the name of 3 firms it suspects were behind its demise. Take a look at one of them right here, guys. Chicago-based Citadel, run by a trader named Ken Griffin. So Ken Griffin was in the news for assaulting and bringing down, I may not have that exactly correct, I didn't pay as much attention at the time, but in the GameStop situation back during the pandemic, Citadel was heavily cited as having been a false actor in that whole situation. And I wish I could characterize it better, but I just know that Citadel and Ken Griffin were tied to GameStop, and Reddit users were very upset with him. So very interesting that Citadel pops up in this article with Bear Stearns' collapse. And then, oh, by the way, guys, it says, where is it? Something else about Lehman here that I wanted to show you guys, or maybe this was the Lehman part up top. Okay, so here's where they talk about assaulting Lehman. This is where they talk about Citadel. But in this last paragraph, it says here, you can look at this as another run on a bank or seminal point in the financial history of this country that could bring about a change, perhaps a drastic change in the way we govern financial markets. If there's a solution, it must be found in the roots of what happened at Bear Stearns, because otherwise I can guarantee you it will happen again somewhere else. Haunting final sentence to this article. Who knows if Brian Burrow ever acknowledged that as the author of this article, but his last sentence of this happens to be a quote from vice chairman of another major investment firm. You can see that here. Look at what the guy says here. It will happen again somewhere else. So June 2008 to September 2008, 3 months later, it happens again. Lehman collapses. And oh yeah, it was a seminal point in the history of the financial history of the country, just like the quote says right there. So I thought you guys would find this interesting. If you're still kind of into 08, or you're looking at it, or you're trying to look ahead to the next thing, some really, really intriguing material in this article right here from Vanity Fair with regard to the Bear Stearns collapse. So like I said, guys, would love for you to hit the subscribe button below, but definitely drop me a comment or a question here if you have any reaction to this article or this video. So thanks for watching, guys.